out to everybody. Last week, you all got a copy of the recording. If you didn't, let me know, and I'll have Lydia send it out. But she told me that everybody that's on the financial webinar did get a copy of that. So I'm going to continue recording those. Actually, I'm recording a lot of the webinars that we're doing simply because we've been creating a library, and we're starting to get quite a few. And just for reference, if we ever need, to watch something over again, for reference, we will have it here. So we have a question from John. John, can you hear me? Did you have a question?
No, go ahead.
Okay. All right. We have been talking about, first of all, the financial statements. And we have talked about the cash flow statement. We have talked about our profit and loss statement. We've also talked about the balance sheet. Next week, we're actually going to have copies of those. And it's also almost going to be like a quiz. I'm just going to pass them out and then ask you guys where are the problems in these particular sheets and how you should actually be reading those. And so you guys can actually look at your own and know, hey, where are the big what should I be looking at every single week in order to see how well that I'm doing. So this week, again, will be short. I'm just trying to keep them short so that we can all continue learning. I just wanted to talk just briefly about break-even analysis. And it's part of the foundation level for our business is understanding what our break-even is. When I speak with a lot of business owners, I say, when do you break even every single day? And I get the glare look in their eyes as if they don't know what I'm talking about. So there's a point every single day when we start making money. When I ask them, do you know what that point is? Most of them can't tell me. So we're going to talk just a little bit about that. Break-even is the net point at which our costs or the expenses and revenue are equal. That's basically what the definition of break-even is. That's when there's no net loss, there's no net gain, and one has broken even. At that point, from there on out, they start making money, or they start losing money. A profit or a loss has not been made, although opportunity costs have been paid and capital has been received. So this is just a quick example here. If a business sells fewer than 200 tables each month, it will make a loss. If it sells more, there will be a profit. So with this information, the business manager will then need to see if they expect to be able to make and sell at least 200 tables a month. That's where those key performance indicators actually come into place, as we know exactly how many units of whatever, cleaning, senior care, whatever it may be, that we have to sell in order for us to start making money. In this particular example, I'm just going to hurry and go on. If they think they cannot sell that many to ensure viability, there's a couple things they could do. They could either try to reduce their fixed costs. We're going to go over what those things mean. By renegotiating rent, for example, or keeping better control of their telephone bills or other costs, renegotiating other costs that they may have, or paying them a little bit later. Or they could try to reduce their variable costs, the price it pays for tables by finding a new supplier. They could increase the selling price of their tables and see if they start selling the same amount and making a little bit more on those 200. Any of these would reduce the break-even point. In other words, the business would not need to sell so many tables to make sure it could pay for its fixed costs. So that's just basically, I hope everyone understands so far what break-even is. It's the point where our costs and expenses are equal. Terms, a couple of things that you need when you're looking at your your break-even point, and that is, first of all, your fixed costs, and they're very simple. Costs that you've got to pay whether you make money or not. Those are the ones that always stay the same. And you can look at those as your rent. You still have to pay rent whether you make any money or not. You still have to pay your insurance. You still have to pay your utilities. Your owner's salary, you still have to pay that. Car payment, just those types of things. Variable costs are costs that only occur when you start making money. Things like labor for your employees, your FICA, your FUTA, your SUTA, your state taxes, your workers' comp, your fuels, your royalties. Those are things you only pay at the point when you start making money. You don't pay a royalty until you make $1. Then you got to pay your 5 or 6 cents. So I think everyone clear so far. Any questions? I have created, and Frank, you've seen this before, so I'm going to pull this up real quick. What do I do with it? Hold on. Okay, this is a chart, and Frank and I have actually done this. This is something that I put together years ago, but I actually adapted it for Spectrum Home Services. And so it is a break-even analysis. And I want to explain this, and I'm going to send it off to all of you, and you can use this as a tool. And I think, Frank and I spent hours on this thing trying to see if it was right, and I actually made some changes after Frank and I played with it just to make sure that it actually did the equations properly. So everything in column B on this Excel is our fixed costs. And so if you go down, everything in yellow in column B, I should say, is our fixed costs. These are the things that don't change. So right here you have salaries, you have your supplies. Your supplies could be a variable cost if you start making more money and you start going through more supplies. Repairs and maintenance on your vehicles, you still have to do those whether you make money or not. Advertising, car, your delivery and travel for marketing, your accounting and legal. Your accountant doesn't give us the week off or the month off if we don't make money. The rent on your office or home, whichever you're using. Cell phones. The other utilities that go along with your home or your office. Insurances, certain types of insurance like your life insurance, they don't give us those off. We still have to pay those whether we make money or not. Insurance on the actual company as well. We're not talking about workers' compensation insurance. In some states, it can be looked at as a fixed cost, and then at the end of the year they make adjustments based on how much you actually earned. But in this case, we're going to just put the insurance as just your business insurance that you have to have. The taxes that you have to pay off your salaries, off your profits, your depreciation, and then others, licenses and things that you actually have to have. So, if you're paying yourself back or you're paying on a loan, those things, the banks don't give us those. And so on the right-hand side, in column D of this is our variable costs. And so basically, what those are is the cost of goods sold. So let's say you're building a deck, and you're making it's $2,000, and the lumber and the nails and everything that you're putting into it is $650. There's where you would put in the $650 right there. It's actually, you wouldn't put the $650 unless you were actually earning money. Your insurance right there, in most states, it's based on how much money, for workers' compensation. If you make $20,000 that month, you're going to pay whatever it costs in that insurance. So right here, because it's an Excel sheet, those of you that know Excel, we can actually put a formula right there. And so any monies that are earned, you can actually put that insurance in there. Direct labor includes payroll taxes. So if your direct labor this month was, I'm just going to throw out a number, $3,500, it'll automatically equate those for you. And so those are just, again, remember these are the variable expenses. Maybe the fuel was $200 that particular month. And royalty gets calculated on top here. So if let's just say you made let's just put $20,000 this month through the work that you did. You'll notice on this one, the equation, your royalty is already fixed for you based on it being a 6%. If you're still at the 5%, you just put 5% in there. It actually puts that in there for you. I put this together to make it simple, any salaries that you have. Here off to the far right, I actually put this where you could put your owners, your admin, any sales staff that you have. You can actually put the burden rates for your particular company. So if the owner's taking out $3,000, the admin is, I'm just throwing out examples here, is $900, in sales there was $400 or something to someone that helped in sales. This one actually adds the burden on there, and if you'll look to the left over here, it actually just put this in the column for it in this particular case. So if you actually just go down here and just start putting whatever your fixed costs are, it will actually figure it out for you. So I'm just going to throw in some numbers here just real quickly. $300 for supplies, repairs and maintenance, $100. I'm just going to show you what this particular spreadsheet does so that you can actually find out where your break-even is every single day. So bear with me just for a minute. Okay. All right, in this particular example right here, what I did is on the top I put our average monthly revenue. If you're currently bringing in $20,000 on average, you're paying a 6% royalty, and your cost of goods were $600, and I'm going to put the labor costs a little bit higher here. $5,800 here. The insurance right here, I'm going to put as your FICA, FUTA, SUIT, all that kind of stuff on there at 13%. So I'm just going to put an equation here. So equals that number. So that figures out for us. So these are our variable costs, and everything on the left is our fixed costs. So in this particular example, what this shows us is based on the costs that we have here on the left, our fixed costs are $8,899. But our fixed costs plus our variable costs are $17,303. So that actually shows what our monthly break-even. Breaks it down into the month, showing that under this particular example, our weekly break-even is $3,993 at the current cost structure. So our daily break-even for this particular example is $798. If it was just fixed costs, that would be the one in the pink line. It would be $411. And so we ask, at what point do we start making money? In this particular example, is as soon as we hit $411.01, that's when we start making money. So in this particular example, based on the costs that we had, they made a profit of this month after they paid themselves a salary of $2,697. And so this is just an Excel spreadsheet that I put together that with a few franchisees and Tony and some other people, I think we finally made it really nice. So, and I'm going to send this out to you guys. And so what I'd like you guys to do is actually just, play around with it and put your numbers in. Because it is an Excel spreadsheet, all of these columns you can change to whatever your expenses are. So you can find out what your costs are and where you actually break even. Most business owners don't know until somebody actually shows them. It's an eye-opening experience for many people. So with that said, any questions about break even?